Hello, I'm James Yardley. I'm the Senior Research Analyst at Chelsea Financial Services. I'm joined today by Richard Penny, the Fund Manager of the UK Alpha Fund.
Hello.
Richard, your fund is very different from your average UK or companies fund. Can you tell our viewers a little bit about how you do things differently and what your process is and so forth?
Firstly, the objective of the fund to beat the UK stock market by 5% per annum is more aggressive than other funds would be. We pick UK investments from the whole of the UK stock market, sometimes taking some of the more interesting earlier stage businesses in the UK market. And for that reason, we think that people maybe have an adventurous type risk appetite and should be prepared to own the fund for 3 to 5 years. If they do that, then you should get that premium return of up to 5% per annum over the market. And when I look for investments, I'm looking for stocks or investments, companies, shares that have the potential to double over 3 years, and then take those high conviction names and have a concentrated portfolio of less than 50 investments. So the types of investments that I think have the potential to double over 3 years are things that are either so depressed in terms of the share price, the sentiment is very much against them, or you can buy a pound of assets maybe for 50p in a pound, or a company that has such a superior business model that it can grow very strongly. Hopefully it's a high return on capital business, it can really compound those returns, and therefore you double your asset base and you double your shares over that 2-year period.
And you're quite happy to invest in the AIM part of the market, which some fund managers shun.
Yeah.
Can you tell us a bit about the ideas you're finding in that part of the market?
Yeah, the AIM market is actually probably in a market where the market has risen, the stock market, the UK stock market as a whole has risen. It's probably an area where there is a distinct discount in terms of the shares that are there. To some extent, there are less people involved there, a less crowded space, can mean there are better opportunities. There's a risk reward thing there that you can get much higher return. And we're happy to take on the risk if we understand what that risk is and we pay actually even a price to do it. I've also been doing this job now for 24 years. I've done hundreds and hundreds of company meetings, perhaps 3,000 or 4,000 over those years. And there are some risks out there, but hopefully we're well positioned to avoid those and to benefit from the upside in some of these investments.
And you've been running the L&G UK Alpha Fund very successfully for many years now. More recently, for the last 2.5 years, you've also taken on the L&G UK Special Situations Fund.
Yeah.
So can you tell us a little bit about how that's different and what you're doing with that?
So the Special Situations Fund is a lot more mainstream. It's for somebody looking at a general UK equity portfolio. Realistically, we think that somebody might put 5 to 10% of their money in the Alpha Trust as a diversification from an index fund or another active fund. But for special sits, because they're more liquid, bigger names, ranging from 500 million up to the biggest in the UK, those are less volatile. You can invest in them. You can invest in them with a 2 to 3 year time horizon rather than 3 to 5. And it's a kind of same concentrated best ideas approach, but from a slightly smaller portfolio of slightly less risky stocks.
And we've had a lot of macro events happening recently. We've just seen Donald Trump elected as the US president. How much does macro inform your process, and what are your thoughts over the next 12 months? Obviously, we've got a lot of important European elections coming up.
I think before Brexit, before the US presidential election, we had an environment which was low inflation and low growth. And I think that means that perhaps sometimes the outlook for shares can look quite muted. I don't think Brexit or Donald Trump being elected has particularly changed that. But I think what it does mean is it makes it a stock pickers market where you need to be looking for a smaller subset of investments, maybe only 5 to 10% of the investments are out there. Don't crowd portfolios with hundreds of investments. Look for businesses that have pricing power and look for businesses that can grow. On Alpha Trust, I'd maybe look for companies in new technology areas or in some of the life sciences, companies involved with gene sequencing, some of the newer areas. The more toned down version of that in special sits would be something like online gaming, where we do see growth and there is pricing power.
Great, thank you very much for joining us, Richard.
Thank you very much.